What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today we saw the stock market bouncing off of those critical support levels, and so far we still see this bull market remaining intact. Will we still see that Santa Claus rally? Also, happy Thanksgiving to all of you. I'm so thankful for each and every one of you, and there's quite a few of you that have now been following me for over a year, and I want to thank you for your continued support. I really think we're just getting started and scratching the surface on what we plan to do right here on the Stocks channel, so I plan on continuing to do this and adding even more content as time goes on. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up about 0.25%, and we did test that critical support level yet again, which is now sitting at 466, and yet again we did see buyers of the dip, and we did get a positive bounce off of that support level. Remember, as long as we're staying above that critical support level, which is our positive sloping 20 simple moving average, and we still have the bull trend, we still want to stay bullish in this bull market. There's no reason to get overly nervous about the bull market rolling over when the price action is staying above critical support and we still have the bull trend. So the definition of remaining objective is letting the price action do all the talking, and we would need to start breaking below about 465 and 462 to start thinking we're going to get another correction. Now keep in mind, with the Bollinger Band squeezing, the lower Bollinger Band is well above that 50 EMA, so it does not look likely that SPY is going to break down below 462 and start heading down to the 50 EMA. Obviously that's subject to change if we do start slicing through support, but right now the technicals tell us that volatility is contracting and we're getting ready for another big move. Obviously that move could be in the up direction or the down direction, but with the full bull trend and continuing to bounce off support, it does look likely that SPY is preparing for that next leg higher. So yes, I do think we are going to get the Santa Claus rally. It looks like SPY is going to attempt to break out above 471 for the third time here, and that should be just enough momentum to get us to that next price target at 477. Yes, we can go higher than that, but play it day by day, and 477 is the next likely price target that we're going to get when SPY breaks out. If we start breaking down below 462, you need to get a lot more defensive because we could go through a full-blown stock market correction, and we have yet to have a full-blown stock market correction this year. So if SPY starts breaking below 462, you need to get a lot more cautious. If we break out above 471, watch that price target at 477 and continue to remain objective because there is going to be a lot of noise. Block out the noise and follow the price action because the price action is going to tell us exactly where this market's going, and noise is just noise, just block it out. On the NASDAQ 100 triple Qs, we could see that we also tested critical support yet again, which is now sitting at 395 because it is a positive sloping support level, which means it continues to rise each and every day. So the price action continues to bounce off critical support, which is obviously bullish price action, and we still do have the full bull trend. Remember, it is possible we finish the 5-wave advance, and we will know that we're going through the correction if we see the triple Qs breaking down below 388. We have the 50 EMA, which is now below the lower Bollinger Band, down here right around 383. And again, because the Bollinger Bands are contracting, it does look like a big move is coming right around the corner, which does tell us with the bull trend that we are very likely getting that Santa Claus rally and we're getting ready for that next leg higher. So looking at the price action and the trend, it's hard to be anything other than bullish. And if you're not bullish, you're not being objective because you can't look at these charts and be anything other than bullish if you're following price action and trend. So watch that critical support level, which is now sitting right around 395, and we would need to break below 388 to get more cautious on the triple Qs. For resistance, look at prices at 401 and our resistance trend line right around 407 to 408 and our price target just above 409. Remember, if we break out above 409, that's extremely bullish, and we're very likely going to see the triple Qs running to the 420s. You can see that the higher volume selling is starting to subside in the triple Qs. Even though it is a holiday week, we will want to watch the volume very closely. In the Dow Jones, we were flat on the day going absolutely nowhere, but we're still holding up above that critical support level at 355, and we're very close to regaining the full bull trend if the Dow Jones can get back above 360. So on the Dow Jones, I think you need to stay bullish above 355, and if we break below 355, get a lot more cautious because we're either coming back down to 351 or closing these gaps in the 340s. You could see the Bollinger Bands are contracting and the lower Bollinger Band is above the 50 EMA, so you can see across all of the indices that it does look like they're getting ready for a big move, and I do think with the bull trends, that big move is more than likely going to be in the upward direction. So look for the Dow Jones to attempt to break back above 360 with resistance at the previous all-time high at 365 and the new price target on 372 on a break above 365. In the Russell 2000, we were up 0.11% today, and we finally see Russell 2000 seeing what that color green looks like with a very bullish looking candle. We were down below the 50 EMA today intraday, but we did bounce off of that support level right around 229, and we did close back above the 50 EMA yet again. So as long as the Russell 2000 is closing above the 50 EMA, you will want to remain bullish. I know it looks like it's been tanking in a straight line, but nothing goes down in a straight line forever, and I do think the Russell 2000 is going to attempt to break out in the very near future. Remember, on a bullish breakout, we'll see IWM breaking out above 234 and 236, and we will start to regain the bull trend on the trip up to the price targets at 245 and 250. However, if you see the Russell 2000 breaking and closing below 229, you need to get a lot more cautious because we could easily go close that gap at 223 and find support at the support trend line. Now look at these Bollinger Bands and see that they are starting to contract. So again, it looks like big moves are coming for the indices. And sitting on top of critical support, it's more than likely going to see a lot of buying pressure unless we break down through critical support. So watch that level at 229 and watch the breakout at 234. On the ARKK ETF, we can see ARKK finally saw a green day going up 1.71% today, but this really could just be a dead cat bounce. We did see nice volume on this buying and we're way below the lower Bollinger Band, so it still classifies as just a dead cat bounce until we get all the way back above about 119 to 120. That's a long trip to get bullish, so don't get overly bullish just forming a lower high. Remember, in a dead cat bounce, you'll form a lower high and then go for that next leg lower at the price target at 99. However, if we start to see price action forming higher highs and higher lows and we start marching up and breaking out above 120 and then breaking that neckline at 126, we could still see ARKK going back into a bull market and getting into the 140s. But don't look too far ahead. We need to watch the price action, and right now the price action is without a doubt bearish, and we're very close to having the full bear trend. So you need to be very cautious being a bull in the ARKK ETF until we see something changing in the price. We need to get above 120 and break out above 126 to get overly bullish, but if we start to see these higher lows and higher highs, we can start getting bullish a little sooner. But we don't know if that's going to happen until we get the price action, so we need to remain patient. On the VIX, we were down over 4% today, so we are seeing the VIX continuing to close below 20, even though we are getting intraday spikes above that level. We were extremely close to closing that gap at 21, but we did not quite close it. But I don't know if that's going to be close enough and we're going to start crushing the VIX from here, or if we still have more volatility coming in the near future. So stay objective, and if the VIX closes above 20, get a lot more cautious of a deeper pullback or stock market correction. But right now, we just don't see the VIX closing above 20, and we continue to see the VIX getting crushed. Once the VIX gets back below 18.2, that will be extremely bullish and more than likely align with our brand new all-time highs as we start to break out and see this bull market continuing for that next leg higher. On Bitcoin, we're currently down about 0.5%, but we're still seeing Bitcoin holding above that support level at 56,000. Remember, the lines in the sand on Bitcoin are bearish below 52,000 and bullish on a break above 60,000. As long as Bitcoin is not breaking below 52,000, I think you need to buy the dip because we are in a macro level bull market that should send Bitcoin to at least 75,000 or 86,500. Don't look too far ahead, and if we break below 52,000, get a lot more cautious. But right now, I still think Bitcoin is a buy the dip off of these support levels. On Amazon stock, we were flat on the day, going absolutely nowhere and getting rejected below that 5 EMA, which is a resistance level right around 35.85. We still have the full bull trend and we do have strong support around 3,500. So if we get down to 3,500, I think you need to buy the dip and get ready for another leg higher. However, if we start breaking down below about 3,450, you need to get a lot more cautious of a deeper pullback. So right now, I think Amazon is a buy the dip off 3,550, 3,500, and 3,450. And below 3,450, get more cautious because we could be going back down to about 3,300. On Tesla stock, we were up 0.63% today, and we still see Tesla looking bullish with price action closing right around that positive sloping 20 sample moving average. Remember, the highest probability chance on Tesla is a bull flag, and you could start to see that Tesla is wedging and consolidating, which does tell us we're going to eat time off the clock, and we're going to see Tesla basically just go sideways. So look for support levels right around 1040 and breakout resistance levels right around 1180. If we start breaking out above 1240, we're very likely going for that next leg higher to 1400. But if we start breaking down below about $1,000, we're more than likely going down to close these gaps at 900 and 843. However, the 50 EMA is still a strong support level, and that's sitting right around 974. So overall, Tesla looks bullish with the highest probability chance to just continue to chop around in this wedge. So continue to trade off these ranges between about 1050 and about 1180, and don't get overly bullish or bearish in either direction. You need to see a decisive breakout above 1240 to get overly bullish, or a decisive breakdown below about 1000 to get overly bearish. On Apple stock, we were up about 0.33% today, closing right on top of my price target at 162. And remember, I have no guarantees that Apple has to go higher than this. So at this point, if I were you, I would lock in my profits and take the bird in the hand. But if you still want to milk Apple for every penny that it could possibly give you, wait for the breakout above 162 for the next price targets at 166 and 168. We still have the very strong bull trend, but I would not be surprised to see Apple come back down and test the breakout level at 157 before we can go any higher. So with the full bull trend, you can buy the dip off 157 and 153. Otherwise, get a lot more cautious if we start breaking below that support level. If we break out, watch those price targets above, but remember, we are getting a little overextended and there's no guarantees that Apple has to go any higher than 162. On the financial sector, we were down 0.22% today, closing back above the 20 simple moving average and getting very close to breaking out of resistance and making that next leg higher. Continue to watch the price action at this very important support level at the 20 simple moving average. On the industrial sector, we were down 0.11% today, closing back above the 20 simple moving average and still holding on to the bull trend, and it does look like we're getting stuck in a wedge here, getting ready to break out in either direction. If we break below the 20 simple moving average, look for support at the 50 EMA. On the healthcare sector, we were flat on the day, but still holding up above the 50 EMA, and we're starting to see some contraction and volatility, and it does look like the healthcare sector is possibly going to bounce off the 50 EMA and try to make another leg higher. The energy sector was up 0.98% today, and it does look like the energy sector is trying to get back on the bull, getting back above all the moving averages with the price action and starting to show a little bit of a bullish breakout. Look for this breakout level to hold if you're getting bullish, and look for that bull trend to come back to the energy sector if we are going to make another leg higher. So jumping back over to the S&P 500, everything right now is looking very bullish. Price action is holding critical supports, and there's been plenty of opportunities for the bears to break below those levels, but the bulls are buying the dip and support is holding up, and we still have the bull trends. So remember, I always tell you to remain objective, and if you're remaining objective, you have to be bullish in this bull market. There's no way you can look at these charts and have bearish thoughts because both price action and trend are bullish, so you need to be bullish as well. Trade with the direction of the trend because the trend is your friend, and you're more than likely going to be on the right side of the trade if you're trading with the trend and not trying to trade against the trend. Follow the price action first and foremost because by far it's the best and it's the king of knowing exactly where the market wants to go. If price action breaks below critical support, there's no denying that, and you'll know to get more defensive immediately. Also, don't forget to take advantage of my Black Friday deal on Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades at TQQs, and you get all of your buy and sell alerts directly via email and text message. You can find out how to join Bank Trade Alerts and how to apply the Black Friday discount deal, which is 67% off your first month, by clicking on the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link below. So happy Thanksgiving, everybody. I hope you all enjoy your holiday off and enjoy that time with your loved ones, and I will see you all after the holiday. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.